the world is evolving actually, I think, even more closely to what we expected. Because we expected a lot of traditional auto manufacturers to see the writing on the wall and rush as quickly as they could into scaling big time into electric vehicles. And what has happened recently? Both GM and Ford have said, we're stepping back. We're not going to do this until it's profitable. The problem with that is in order to be profitable, they need to scale. That's how this works. These are learning curves that they are riding down, and those are expressed in cost declines. So the fact that they're pulling back means there's more share for Tesla and others who choose to go for it. The good news is our clients can get in and have access to these amazing companies for just $500, and they get quarterly liquidity. So that's the good news. The markdowns are simply, if we see in the secondary market employee stock trading at a steep discount, we have to take that into account. If we see others in the more traditional asset management world, like Fidelity and others, marking their holdings down, we need to take that into consideration during our daily mark-to-market. So it's an abundance of caution. We have a 5-year investment time horizon. Do we think that's where X belongs in terms of valuations? Absolutely not. Absolutely not. A roughly $20-ish billion valuation for what we believe truly will become the everything app. Think WeChat Pay. Elon started his entrepreneurial career in the payments industry, and he's been thinking about this for a long time. He now has money transmitter licenses in more than half of all of the states, which we learned on Twitter Spaces, or on X Spaces, I should say, the other day when we had our interview with him. So that's exciting. He's going for it. Now that we've had this very nice run this year, we think the answer to that question is in the private markets. They're close. What's fascinating to us is that the public markets have been leading the private markets for the past 3 years. As our funds were falling in 21, private valuations were going to all-time highs along with the NASDAQ. They were taking their cues, I suppose, from the NASDAQ. But real innovation, if you looked at our portfolios, was starting to revalue to the downside, and even more so in 2022. We are still seeing major down rounds taking place in the private markets. And I'm always surprised at this sort of thing, because you would think that the private markets lead the public markets. That has not been the case in the last few years. First of all, very often we just look at what he does, not exactly what he's saying, which can often be a distraction, or it can be an advertisement for his cars or for X or for SpaceX and so forth. So, but we have a scoring system as we are evaluating companies and their founders and their management teams. And there are 6 metrics, and one of them is moat and barriers to entry. And I think Elon is a maestro of raising barriers to entry with innovation, which that is so much faster than anyone else. Why? Because he's so first principles, physics driven in his analysis of how to approach a new idea, a big idea. We don't actually look at the world that way, one relative to the other in terms of management teams. We do look from our scoring system at the scores, which include moat, management, people and culture, execution, valuation, that might surprise people, and product and service leadership, and thesis risk. Those are the 6 scores. And all 3 of them score very highly. Which one scores the highest? They're actually very close to one another, to be honest. In our private portfolios, we are already exposed to Anthropic, which has been a major beneficiary of the drama around OpenAI that we all witnessed a few months ago. But if you look at GPT-4, which is the latest large language model, that OpenAI has published, it is way above others in terms of performance. So there you have it, the pros and the cons. So we can't tell you what we're going to do in that portfolio, but we are so impressed at how OpenAI has led the industry. We're also impressed, however, at the open source models, and we'd like to encourage more of that movement. We know that Meta Platforms has with Llama 2, and it's working on others, is moving very quickly and making great strides. So for much lower cost, open source is free, companies can get close, not at GPT-4, but close.
Hey, money talkers, buckle up because the crypto roller coaster just hit a loop-de-loop. Smash that like button, subscribe, and let's dive into the juiciest bits. Starring the queen of innovation herself, Cathie Wood. Let's roll. Cathie Wood, the mastermind behind Ark Invest, is playing a wild game. Picture this. She's selling Nvidia stock like hotcakes and diving into the abyss with Palantir Technologies and the trade desk. Why? Well, Nvidia had its moment in the sun, tripling in 2023, and Ark's shaking things up. A whopping $10.1 billion showdown is on the horizon. Can you feel the excitement in the air? First up in Cathie's dance card, Palantir Technologies. This rockstar turns big data into a symphony of actionable intelligence. They've got this new generative AI product, AIP, making waves. Palantir's profits are singing a happy tune, and analysts are grooving to the rhythm of a potential 26% annual sales increase. Watch out for this rising star. Next on the playlist, the trade desk. They're the maestros of digital ad campaigns, rocking the best ad tech platform crown. With a dance floor powered by industry-leading AI, they're waltzing through the digital channels, leaving competitors in the dust. Sure, the stock had a little stumble, but the encore looks promising. A potential 22% annual sales growth. That's music to investors' ears. But wait, the show ain't over. Cathie Wood's got some thoughts on Ford and GM tapping the brakes on their EV dreams. While traditional automakers hit pause, Tesla's hitting the gas pedal. It's a blessing in disguise for Musk's electric empire. More share for Tesla means more room for growth. The EV sector is still jamming, and Tesla's the headliner. Are you ready for the electric encore? And then you have it, money talkers. Cathie's wild card shuffle, the $10.1 billion showdown, and the Tesla tango. It's been a crypto carnival. Now let's continue our discussion with Cathie Wood.
We were very gratified at our asset retention in 21 and 22. In fact, we had net inflows, if you combine both years, of more than $18 billion. And this year, one might expect that those who average down into the very steep declines that we were seeing in 22 especially, might take some profits. So we have had, I know for our flagship strategy, it's roughly $500 million in outflows, maybe for all of our strategies, 1.8 million. So maybe 10% of the inflows that we enjoyed during 21 and 22. So again, we're very gratified and grateful to our clients for the support that we continue to receive. We have had days of, on balance, very recently, yes. And I think part of this is many people do tax management toward the end of the year. And so some of the outflows might have been associated with clients who got in at a high cost base and we're just harvesting some tax losses. But I think we're through that.
Do you find it a little surprising, though, Cathie, considering the run-up? Or I'm curious about the conversations you do have with investors, considering the year that you're having and then to see those flows. It's going to be a little disheartening. Yeah.
Oh, no, not at all. Actually, we put out a piece for Resolute, our distributor, who, and we basically showed to them, if you rebalance our strategy when there have been big moves one way or the other, if you rebalance regularly or based on a rule like when the fund's up 15% relative to everything else, take some profits. And what it showed, that study showed that if you are disciplined that way, that over any rolling 5-year period, it is highly likely almost 100%. I'm not quite sure if it's quite that high, but that you will beat the market, meaning as measured by the NASDAQ or the S&P, over a rolling 5-year period. And so a lot of our funds are with advisors who are very sophisticated and responded somewhat, perhaps in this tax management part of the year, to that message.
Former U.S. President Donald Trump has warned that the U.S. could face a stock market crash worse than that of 1929 and a Great Depression if he doesn't win the upcoming presidential election. He stressed that the U.S. economy is terrible and inflation over the past 3 years has totally destroyed the buying power of the consumer. Throughout the past year, enthusiasm and speculation around Bitcoin and other crypto assets have surged, particularly as the year drew to a conclusion. The Motley Fool's forecasts for 2024 strike a pessimistic tone, anticipating a buy the rumor, sell the news scenario related to the spot Bitcoin exchange-traded fund, ETF, and further projecting that the crypto market will not decouple from the traditional stock market. In contrast, Bitcoin advocates maintain a more optimistic outlook for the upcoming year, estimating the value of Bitcoin to range from $80,000 to $120,000. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.